Welcome back to Stocks Telegraph, your go-to source for the latest market insights and analysis. Today, we're diving into the world of one of the most talked about e-commerce giants, Shopify Incorporated, ticker symbol SHOP. As a leading platform for online stores and retail point-of-sale systems, Shopify has revolutionized the way entrepreneurs and businesses approach digital commerce. But with changing market dynamics, shifting investor sentiment, and new strategic moves, the question remains, is Shopify still a top contender in the stock market, or has the landscape shifted? In today's video, we'll break down Shopify's latest financial updates, performance trends, and key factors driving its stock. Whether you're an investor or simply interested in understanding Shopify's growth story and future prospects, this video is for you. But before we dive into the numbers, make sure to hit that subscribe button so you never miss an update from Stocks Telegraph. If you enjoy the content, don't forget to like the video and share it with friends who are also interested in stocks and investing. We'd love to hear your thoughts. Drop a comment below and let us know what you think about Shopify's future. Your engagement helps us create more valuable content for you. Thanks for watching, and now, let's break it down. Let's start by taking a look at Shopify's recent stock performance, which has been nothing short of impressive. As of today, Shopify's stock is priced at $108.92, reflecting a 39.82% year-to-date gain. To put that in perspective, over the past month alone, it has surged by 30.16%, hitting a high of $114.51, its highest point since 2022. So, what's driving this rally? Analysts are overwhelmingly optimistic about Shopify's future. The company's analysts' mean recommendation stands at 1.90, just shy of a strong buy signal of 1.0, indicating that most experts see continued growth potential for Shopify, particularly in the months ahead. With this positive outlook, let's dive deeper into Shopify's financials to uncover what's really driving these gains. First, let's focus on Shopify's profitability metrics. Shopify boasts a solid return on investment of 12.38%, which indicates the company is efficiently using its invested capital to generate returns. Combined with a 16.41% profit margin, it's clear that Shopify isn't just growing, it's doing so with strong operational efficiency. Next up, Shopify's gross margin stands at 51.07%, suggesting that the company is effectively managing its cost of goods sold and maintaining healthy profit margins as it scales. But that's not all. Shopify's earnings per share has surged by 60.86% this year, and analysts are forecasting an additional 22.33% growth next year. This kind of momentum is certainly encouraging for long-term investors. Moving on to revenue, Shopify has seen a 23.18% increase in sales over the past 12 months. Even more impressive, its quarterly earnings have grown by a staggering 112.84% year over year. A key metric for any investor is how a company handles its debt. Shopify's debt-to-equity ratio of just 0.12 shows it takes a conservative approach to leverage, minimizing risk for shareholders. This, coupled with its ability to scale efficiently, makes Shopify an attractive stock for investors who prioritize financial stability. Finally, Shopify stock is currently trading 37.05% above its 50-day simple moving average, which is a clear signal that the stock is on an upward trajectory, and investors are confident in its continued momentum. Now, let's dive into Shopify's most recent earnings report for third quarter 2024, which exceeded expectations across multiple key metrics. For the third quarter ending September 30th, 2024, Shopify's gross merchandise volume, which measures the total sales processed through its platform, jumped to $69.7 billion, up from $56.2 billion in the same period last year. Analysts had expected GMV to hit around $67.78 billion, so this beat was a strong indicator of Shopify's healthy growth. On the revenue side, Shopify reported $2.16 billion, marking a 26% increase from last year's $1.71 billion, and surpassing Wall Street's expectations of $2.12 billion. This robust revenue growth reflects the continued demand for Shopify's services and its expanding merchant base. Shopify's monthly recurring revenue, a key metric for subscription-based businesses, also grew significantly, rising to $175 million from $137 million in third quarter 2023. This shows that Shopify's subscription business remains a strong and reliable revenue engine. One of the most impressive aspects of Shopify's third quarter performance was the growth in profitability. Its gross profit surged to $1.2 billion, up from $901 million last year, and its operating income more than doubled to $283 million, compared to $122 million last year. And for those interested in cash flow, Shopify generated $421 million in free cash flow in third quarter, up from $276 million last year. With a free cash flow margin of 19%, up from 16% in 2023, Shopify is generating strong cash from its operations, which positions it well for future investments and growth. So, what's next for Shopify as we move into the final quarter of 2024? The company has provided strong guidance for fourth quarter, expecting revenue growth in the mid to high 20s% range year over year. In terms of profitability, Shopify expects gross profit growth to remain consistent with third quarter 2024, while operating expenses as a percentage of revenue are projected to be between 32% and 33%, in line with previous targets. Shopify also expects free cash flow margins to stay strong, similar to what was seen in fourth quarter 2023, which is good news for investors focused on the company's long-term financial sustainability. The company's strong cash generation gives it the flexibility to invest in future growth opportunities, especially as we head into the busy holiday season. Looking at analyst sentiment, Shopify continues to attract bullish ratings. Recently, Goldman Sachs upgraded its price target for Shopify to $135, up from $88. This upgrade comes after Shopify's better-than-expected third quarter results and reflects confidence in the company's ability to capture market share, particularly in the U.S. e-commerce sector. Oppenheimer has also raised its price target to $130, citing Shopify's potential for growth, especially with the company's recent partnership with PayPal, which is expected to increase transaction volumes on the platform. In addition, Evercore ISI and Roth MKM have both raised their targets to $125 and $135, respectively, further solidifying analyst confidence in Shopify's long-term growth prospects. With multiple analysts upgrading their targets, it's clear that Shopify is seen as a strong player in the digital commerce space. In conclusion, Shopify continues to show strong performance across all key financial metrics. With earnings growth, strong analyst backing, and a strategic focus on partnerships and technological innovations, Shopify is well-positioned for continued success. Analysts have set price targets ranging from $125 to $135, signaling confidence in the company's future growth. As we head into the final quarter of 2024 and beyond, Shopify's strong earnings, expanding merchant base, and ability to scale during high-demand periods make it a top pick for many investors. If you enjoyed this breakdown of Shopify's latest performance and outlook, make sure to hit that subscribe button to stay up to date with all the latest stock market insights from Stocks Telegraph. Like the video if you found it helpful, and don't forget to share your thoughts in the comments below. What do you think about Shopify's growth prospects? And as always, sharing is caring, so be sure to share this video with anyone who might find it useful. Thanks for watching, and we'll see you in the next video.